Hello friends, we'll continue with share capital, right? Now we have discussed that a share capital is basically divided into three parts. Clear? One is authorized capital, right? Then issued capital, and then subscribed capital. Clear? This is what we have discussed. A subscribed capital is further divided into two parts, fully paid and partly paid. Then partly paid is further divided into two parts, that is called up and not called up. Clear? This is what we have discussed till the last lecture. Clear? We divided a share capital into three parts: authorized capital, issued capital and subscribed capital. Authorized capital is the maximum amount that a company can raise by the issue of shares. Issued capital is the amount that the company wants to raise by the issue of shares. And subscribed capital is the amount that is received by the company against issue of shares. Clear? Now we are moving on to a very important part, that is the practical aspect of this. Till now we have been discussing the theoretical aspect, right? What is shares, what is share capital, classifications and all. Now we are moving on to the actual practical part of the share capital, that is disclosure of share capital in balance sheet. We are going to discuss about disclosure of share capital in balance sheet. Right? What is the share capital? It is these three parts: authorized, issued and subscribed. How we have to show these capitals in the balance sheet, that is the practical aspect that is very important from the accounting point of view, right? First you should know that we prepare that balance sheet is prepared as per Schedule 3 Part 1 of Companies Act 2013. Clear? So balance sheet is prepared as per Schedule 3 Part 1 of Companies Act 2013. Earlier there was Companies Act 1956, there it was Schedule 6, I guess. I'm not sure, but I guess it was Schedule 6 we used to prepare balance sheet. But now a new format is given, that is given in Schedule 3 Part 1 of Companies Act 2013. Clear? Now what we have to do is we have to see how we show the share capital in balance sheet. Clear? For that, let me take an example. We'll see this with a practical example. Okay? You can write this example. X Limited is a company, right? X Limited has an authorized capital. X Limited has an authorized capital of rupees 10 lakh divided into 1 lakh shares of rupees 10 each. What is this rupees 10? This is the face value of a share, right? Now X Limited issued 50,000 shares of rupees 10 each, right? These shares were fully subscribed right, and all amount was received except for rupees 5 on 500 shares issued to Y. Write down this example. X Limited is a company that has an authorized capital of rupees 10 lakhs divided into 1 lakh shares of rupees 10 each. Sorry, here it is 1 lakh shares divided into 1 lakh shares of rupees 10 each. X Limited issued 50,000 shares of rupees 10 each. These shares were fully subscribed and all the amount was received except for rupees 5 on 500 shares issued to Y. All the amount was received except on 500 shares. On that 500 shares, rupees 5 was due. Now, how to disclose this in the balance sheet? We are going to do this. Let's see. We will prepare a balance sheet extract, right? Balance sheet extract. This is now as per Schedule 3 Part 1 of Companies Act 2013. Clear? Here I will write particulars, note number and amount. Here I will write equity and liabilities. Clear? Under the equity and liabilities, first we will say shareholders fund. First heading will be shareholders fund, and under that the first item will be share capital. Clear? Now we have to find out this amount of share capital. We have to find out this amount of share capital. For that, what we are going to do? For that, we will prepare note to accounts. Right? Along with the balance sheet, we prepare note to accounts. Like you remember, we prepare working notes. Right? These are just like the working notes to the balance sheet. We call them as note to accounts. Clear? These are like working notes for the balance sheet. Okay? Particulars, amount. So first note is regarding share capital. Now we divided share capital into three parts: authorized, issued and subscribed. First of all, we will show authorized capital. That is, what is the maximum capital that the company can raise from the issue of shares. What is authorized capital? They say X Limited has an authorized capital of 10 lakh divided into 1 lakh shares of 10 each. So what is our authorized capital? 1 lakh shares of rupees 10 each. This is how you are going to write. So this is 10 lakh. 10 lakh is my authorized capital, the maximum amount that a company can raise from issue of shares. So what is the second thing I told you? After authorized capital, we discussed about issued capital. Right? We discussed issued capital. Now, what is the issued capital? Issued capital is the amount that the company wants to raise through the issue of shares. Right now, company wants to issue only 50,000 shares out of the 1 lakh shares that are authorized. Right? So, what is the issued capital? Issued capital is 50,000 shares of rupees 10 each. 5 lakh. Clear? So authorized amount is 10 lakh, but the company wants to raise only 5 lakh right now. Clear, friends? Now, third and the very important part is subscribed capital. Subscribed capital. Now you can see he says 50,000 shares were issued and all were subscribed. Clear? That means people have bought 50,000 shares of rupees 10 each. And how much amount we should receive? 5 lakh rupees. But he says on 500 shares, rupees 5 is still to be received. We called for rupees 10. On 500 shares, we received only rupees 5 and not rupees 10. Subscribed capital we will divide into two parts. One is subscribed and fully paid. Now on 500 shares we have not received rupees 5. On the rest of 49,500 shares we have received the money. Isn't it? Am I right? So fully paid up shares are 49,500 shares of rupees 10 each. How much? 4,95,000. And subscribed and not fully paid up. Subscribed and not fully paid. On 500 shares of we called rupees 10. How much? 5,000 we called. But how much we received? Only rupees 5 and the rest 5 is our calls in arrears. We discussed about calls in arrears. What is calls in arrears? The amount that we called but we didn't receive. So 2,500 is the amount that is still to be received and 2,500 that we have received. So how much is the subscribed capital? 4,95,000 plus 2,500. This comes to 4,97,500. So this is the actual amount that we have received from the shareholders. On 500 shares, rupees 5 is pending, 2,500 is pending. So out of 5 lakh, if you remove 2,500, what you have received is 4,97,500. So this is the amount that we carry to balance sheet. Here I will say share capital as 4,97,500. Clear? Clear, friends? How we are going to disclose it in the balance sheet? Share capital. We will prepare notes to accounts. Here I will say note number 1. Clear? So in note number 1, we have calculated the amount of share capital that will be transferred to balance sheet. First, we will show authorized capital. As per the question, the authorized capital was 10 lakh divided into 1 lakh shares of 10 each. That is the maximum amount that can be raised by issue of shares. Then what we say, issued capital. Issued capital is the capital that the company wants to raise through issue of shares. Right now, company says out of the authorized 1 lakh shares, we want to issue only 50,000 shares. Like you asked your father, out of the 1,000 authorized money as pocket money, right? You ask your father to give you only 500 right now. Similarly, the company says We need only 5 lakh rupees. For that, we will issue 50,000 shares of rupees 10 each. Then the most important, subscribed capital. In this, we divide it into two: subscribed and fully paid, subscribed and not fully paid up. Subscribed and fully paid means the shares on which we have received all the money. We have received 10 rupees, and fully paid is the shares on which we have not received. We have not received the full amount. On 500 shares, we have not received full amount. That means on 49,500 shares, we have received the full amount of rupees 10. On 500 shares, 5 is the calls in arrears. That means the money that you have called, but you have not received that money, that is calls in arrears for you. Right? In the last lecture, we discussed the difference between calls in arrear and the money not called. Clear? So be careful with this. That's why in the last lecture I told you that understanding these concepts of subscribed capital is very important. Otherwise, you will not be able to show it correctly in the balance sheet. Clear? So this is how you are going to show the share capital in the balance sheet. Clear? You can write this down, the example. Then the balance sheet, extract it is, and note to accounts. I hope this much is clear to you, friends. Right? So if you have any queries, just send me an email at ksjteaching@gmail.com. This is what I have explained you, the very basic disclosure in balance sheet. When we will move on to the actual practical part, actual journal entries, and with that we do the balance sheet, we will get some complex parts also, right? But you should be clear about the basics. What is a subscribed capital? What is subscribed fully paid up? What is subscribed and not fully paid up? What is subscribed and not fully paid up, not called by company? You should be clear about these concepts. If you are clear about these concepts, then doing the balance sheet, preparation of balance sheet at the later stage will be easy for you. Clear? So, in the next lecture, what we are going to do is issue of share capital, issue of shares, and money received. Right? We are going to do journal entries regarding the issue of shares and money received against issue of shares. We are moving on to the actual accounting part, that how we are going to do the accounting for shares and the money that is received against share capital, against issue of shares. Right? So in the next lecture, we will do with the journal entries. That is very easy. So don't worry about anything. Right? We will understand each and everything and do the journal entries. Right? We'll go step by step. So don't worry about anything. Right? So that's all for this lecture, friends. Thank you so much.